Hello investors, welcome back to your number one place for all your investing needs. So in today's video, we're going to be going over all of my dividend payouts. So obviously, I've been slacking a little bit and I have not shown you guys my dividend payouts for the past few months actually, so we're a little bit behind. We're going to be going 2 months back to see what dividends paid me out in the month of July. So we're going to be going over July's monthly payouts. Now, one thing to see is I have right here all of my dividend payout months. So basically what I do here on this chart is I have all of my stocks that I own in the portfolio, and then I have which months that I'm going to be receiving dividends from these stocks, and then as well as what their dividend percentage is. Now, this percentage right here is not up to date, so do not go off of these percentages. They could be a little bit higher, a little bit lower right now. I haven't updated this in about a month or so, or actually about 2 or 3 weeks, so not too long. But as you can see, we have AT&T right here, and it pays quarterly, so we get paid 4 times: February, May, August, and November. And then we have other stocks like SPHD, which is a monthly paying dividend. Now, monthly paying dividends obviously pay you every single month, which means you can go ahead and take that money and drip it back into your portfolio, and reinvest all your dividends that you're receiving so you can buy more shares. Now, some people like monthly dividends, some people like quarterly. I don't mind. I like both of them. I mean, it's pretty much the same thing. Just with the monthly ones, you get your money up front quicker and you can reinvest it faster, I guess, for compounding interest. So I'm going to show you guys the power of compounding interest actually, just to show you an example of why dividend investing is so awesome. So let's say this is your initial investment. So you're going to type in here how much you're putting. Let's just say you started off with $5,000, and then every month you're going to add about, what, let's say $200 every single month, which is not actually that much, but it's better than nothing. So let's say let's say you just turned 18, and you're going to wait for about 30 or 40 years. So let's just put in 30 years, so you'll be about 50 years old when this ends. So let's just put 32 years. So you'll be 50 years old when this is ending. So 18 plus 32 is 50. Estimated rate of return, let's just say you're going to be receiving about a 9% return on your stocks, obviously, with dividend, or actually 10%. 10%. Let's just do 10%. So obviously that is dividends and growth, obviously, in the stock. So let's just say 10%. And then if you calculate right here, we're going to see down here, in 32 years, you will have about $588,299.53. So as you can see here, every single year, your total contribution is increasing, and obviously your wealth is increasing as well. So right here in the end, total contribution is $81,800, and your future value is going to be $588,299.53. So you made $500,000 just by investing $5,000 in the beginning, and then $200 every single month. We could always pair $200 every month. You could work some overtime at your job, a couple of hours, to get some extra hours, and you received $500,000 before you are even retired. And that could mean a lot of things for you, obviously. Now let's just increase these numbers a little bit and make things a little better. So let's just keep that 5,000. That sounds like a reasonable amount. But let's just say you have a better job, and let's just say you have like a roommate or something, and you're adding $500 every single month. And now you're 18 years old, and then you do 32 years, so you'll be 50 years old, and once again 10%. And let's see what the calculations say. Wow, in 32 years you're gonna have over $1,000,000. So at the end, you're gonna be total contribution is about $197,000, and you're gonna come out with 1.3 million. So you made 1.1 million just by putting in $500 every single month for 32 years. Now, obviously, as you can see with compounding interest, it starts off slow. Those first 10 years, you're not going to see much gains. I mean, you invested 65K and you only got back about, what, 40,000 profit right there. But the longer it goes, the more that compounding interest starts to work in your favor. You're going to be receiving, because you're receiving 10% of your value, every single year after that. So as your value is increasing, that means you're receiving that 10% off of that number, which means you're going to be receiving more. So right here, year 25, you have 644,000 value. The next year, the value is 714. So if you do the math right there, that's about 56 plus 14, about, you made 70 grand just that 1 year. And down here in 10 years, you didn't even make 40 grand. So in that 1 year, you made more than you did in the first 10 years. But that's the point, obviously, compounding interest. So over time, you're going to be receiving more and more. And then that last year, you went from 1.18 to 1.32. So you made over $125,000 $125,000 on that last year. So obviously, the longer you're in the market with compounding interest, the more you're going to be receiving in dividends. So time is your best friend pretty much. The sooner you get started with dividend investing, the better it is going to be for you in the long run. Obviously, short term you're not going to be seeing much gains, but in the long run you're going to be receiving a lot of return. Now before we get into all of my payouts, go ahead and smash that like button for me, guys. Can we try to get around 100 likes on this video? I know the dividend payout videos don't really receive as much views usually, but let's try to go for 100 likes on this video. Leave a comment below letting me know how much you received in dividends last month, and let me know what percentage you're getting back. What percentage are you getting out of your portfolio? 3%, 3.5%, 4%, whatever it is. Also, subscribe to the channel, turn on that bell notification so you get notified every time I make a new video. I make videos about dividend investing, top stocks, top penny stocks, and just growth investing in general. So let's get into all my dividend payouts now. All right, guys, so as you can see right now, the portfolio is valued at about $24,436.70. Our total earned dividends is about $490, but the portfolio has been growing obviously over the past year. Now, one thing is, as we go over all of the dividends, after we get them all, we go ahead and add them all, and then we plug in this chart. So this is my dividend passive income chart where I add how much each month I got paid out. As we can see, last year in April is when we started. We received $1.26, and then last month we received about $77.99 in dividend. So you can see that the increase, it's going up every single month, every single year, and we're hoping to continue to grow that and obviously live that fire life in the future where we can just sit home and receive dividends and not have to work. Now, let's get into the dividends. So the July 1st dividend that I got received was Coca-Cola. So Coca-Cola paid us out $9.05 on July 1st. If we take a look at their chart right here, not bad, Obviously, with the Rona, the stock crashed down to about $38 per share. Now it's kind of at this price about $51. Hopefully, we get a little breakout. We're still below the pre-COVID, prices, but that's okay. We've got plenty of time to go. Their dividend is 3.17%. They pay out a quarterly paying dividend. Warren Buffett's favorite stock, if you could say that. I mean, everybody knows Warren about his Coca-Cola. So this is one of my favorite holdings actually in the portfolio, and yeah, I love Coca-Cola. Next up, we have July 8th, 2020, ticker symbol LQD. So they paid us out 87 cents, and actually this is a bond ETF, and I actually got rid of this one out of the portfolio. So this one is not in my portfolio anymore. I didn't think that it was worth to be in my portfolio anymore. I don't really like bond ETFs or just bonds in general. I feel like that is something for the older investors. No offense to anybody, but in my opinion, I'm not a big fan of the bonds. So this one is a dividend of 2.89%. So that's actually a pretty decent dividend. It's actually trading at around the same price that it was before the Rona happened. I mean, right here it crashed down to about $105 and it came back, so that's not bad. But right here you can see it pays out a monthly dividend, so monthly dividend on this one. So a lot of investors like monthly dividends because they can go ahead and reinvest all their money that they receive back into the portfolio to buy more shares. So they use that drip method where they just keep buying back more shares. After that, on July 15, 2020, we have ticker symbol O, so Realty Income. This is a REIT, one of my favorite REITs in the portfolio. So they paid us out $3.24 on July 15th. Obviously REITs are amazing. They have not recovered yet from the crash, but they're doing decent. This one has a dividend of 4.29%. It was trading at around $80 per share before the crash, and it went down to about $42, low 40s. Now it's trading around mid 60s, and it is a monthly paying dividend about 23 cents. Like I said, one of my favorite REIT companies. I think this is a very healthy company. Even in situations like this, it's still managed to do very, very well. After that, July 15th, we have another beautiful REIT, which is Store Capital. So Store Capital paid us out $14.51. Now you can see that's a drastically higher dividend than ticker symbol O, which is Realty Income. The reason behind that is because Store is not a monthly paying dividend. Store is a quarterly paying dividend. So Store pays you out every single quarter instead of every single month. So obviously this one has a dividend of 5.02%. Very nice dividend. It was trading up here about $40 per share before the crash. Came down to about $14. That was a steal right there. If you got in at $14, $15 per share, wow, you got a really good deal. I mean, as you can see right now, it's slowly coming up. Right here, it actually had a high about $27, and that's where actually it's trading again now. But this one, on any pullback, really, these REITs are just amazing to hold, especially for me since I'm a long-term investor. I believe in these dividends, obviously. So I love REITs. In my opinion, they're one of my favorite sectors to invest in for the long term for dividends. After that, we have Comcast, ticker symbol CMCSA, on July 22nd. So Comcast paid us out $2.61. Comcast is another beautiful company actually to invest in for the long term, obviously, especially with the 5G and other things that they're doing. They have a dividend of about 1.98%, so almost 2%. They're quarterly paying dividend of about 21 cents per share, 23 cents now, so it's an increase of about 2 cents. Obviously, it's trading at around pre-crash levels, so down here, once again, amazing opportunity for anybody that bought when the market dipped, especially us dividend investors for the long term. We had a really nice discount, obviously, and any dip is an amazing opportunity. So right now, the market has pulled back these past few days. Obviously, the S&P 500 and the Dow Jones have not pulled back as much as the tech, and obviously tech stocks usually don't have dividend like, or very low dividends. Like Microsoft has like a 1% dividend, I believe, maybe even lower, and like Apple, they have very, very low dividends, so they're not really paying us out that much. But the market is still having a little bit of a pullback, and hopefully we can take that opportunity to buy some more stocks. That's actually what I'm doing. I just put in some more buy offers that should go through on Tuesday at the open. So we'll see what happens with that. All right, the list is getting shorter, but the dividends are getting better. So July 31st, at the end of the month, we have ticker symbol SPHD. Obviously, this is the S&P 500 high dividend low volatility ETF, one of my favorites. This one paid us out $8.92. This stock is one of my favorites, actually. It pays a monthly paying dividend. Its dividend is about 5.36%, and it was trading at around $43 before the crash. Obviously, it went down to about mid 20s, so it was about $25 per share. Here it actually made a nice high of about $38 and then pulled back. Now we're trading around $34, $35. That's where it's stuck at. But it's a monthly paying dividend, and that's something I like. It's about 15 cents per share. This one, on every pullback, I invest more and more, because this is one of my favorite, actually, ETFs to hold, especially since it's the S&P 500 high dividend low volatility ETF. So I'm always buying that dip and hoping to lower my average cost and have that dividend. I mean, 5% dividend, that's a really nice dividend in a company like this, or an ETF like this is what I mean, because it owns all of these little or bigger companies into one, so it puts them all together, and that's something that we definitely like to see, especially with the monthly paying dividend, so you can just go ahead and reinvest your investment into more stock. And finally here, July 31st, the last stock that paid us out for dividend is going to be JPM, which is JP Morgan Chase. Obviously, this is a bank. They paid us out $6.92. This is a quarterly paying dividend stock, so this one pays out every single quarter. Banks are kind of on a little run right now. They're kind of doing decent. They have a dividend of 3.48%. So JP Morgan Chase, very nice company. I own them, and I own Bank of America, two of my favorite banks. It was down here at a low of about $80. Here we're a high of 135. So we still have a long way to come up here to recover, but that's okay. I know that JP Morgan Chase is going to do great in the long run. They have a dividend of 90 cents per share, like we said, quarterly paying dividend. What I'm going to do is go ahead and add up all those dividends, plug it into the chart, and show you guys how much I received. All right, so we went ahead and added up all those dividends that we received for the month, and it came out to be $46.12. So if we compare that to last year in July we received $28.77. So that's about what? About let's say $18 increase from last year. So that's a great sign for me. That makes sure that I'm growing, obviously. And obviously, certain months I get paid more than others. Like these quarterly ones, I get paid more. As you can see, 36, 57, 77. So in September, it should be a really good month again. Hopefully, it can break that $77. But the dividends are increasing. That's something we want to see. That means I'm receiving more cash every single month from my dividends. That means I can reinvest more into the portfolio, and that means that I'm going to be receiving more and more. So compounding interest, guys, you guys know that compounding interest is like the eighth wonder of the world. Everybody loves compounding interest. That's the key to success. Our goal is going to be to keep investing into these healthy stocks, receive dividends, keep reinvesting, and then in the future, hopefully be receiving a great amount of dividends per month. My goal right now is to, in the next 5 to 10 years, to be receiving about $1,000 per month in dividends. As we can see, we're already almost hitting $100 per month, so we just have to about 10x that in the next 10 years or so, and I'm going to be very happy with that. Now, As you guys can see, that's how much we have invested and how much we received in dividends so far. If you guys want me to go ahead and show you, I can show you all of these pies. So the different slices in my pie, I can show you. I have it all, in different sectors. So I have consumer, health, bonds, real estate, utilities, telecommunication, finance, tech, and now we have a logistics one that I just added to the portfolio. As you can see, I'm adjusting the portfolio a little bit, buying some new stocks, selling certain stocks that are not actually dividend stocks that are in this portfolio, like Amazon. I don't know why I had Amazon in here. But I got rid of Amazon and I actually made a second portfolio. So we have a growth portfolio as well. Not just this dividend portfolio. So I can make a video, guys, on my dividend portfolio and the growth portfolio. So leave a comment below, obviously, if you guys want to see those portfolios, and I'll definitely make a video for that. Leave a comment below also telling me if you received more dividends in the past month or less dividends than I did. So $46.12. Make sure you smash that like button. Let's try to get over 100 likes on this video. Subscribe to the channel, turn on the bell notifications to get updated when I make a new video. And good luck in the next month. I'll be seeing you guys soon. Goodbye.